So let's move on and take a look at one consequence of a softer job market, and this gets to a bigger trend that's worth discussing as well. So job growth has slowed. The unemployment rate has picked up. No surprise that we're beginning to see some cracks in the credit markets. So here's a look at credit card delinquencies, and these are long-term credit card delinquencies. These are delinquencies of 90 days or more. This is the percentage of credit card balances that is delinquent by 90 days or more. These are quarterly numbers, and we'll get an update on this report as well, or this series as well, tomorrow too. So another November 5th, another big statistic to watch. But again, you can see the trend going into this next report. Delinquencies have been climbing. They've been climbing very sharply. In the second quarter, they were 12.6% of all credit card balances were 90 days or more delinquent. That's right in line with where they were in the first quarter. Those two quarters, Q1 and Q2, were the highest long-term credit card delinquency numbers, share of credit card balances that were long-term delinquent since 2011, since the first quarter of 2011 on the other side of the global financial crisis. You can see where they peaked at close to 14% during the GFC back in the late 2000s. So this is something that we're not seeing in the earnings releases that we have been getting in recent weeks. And again, this speaks to a broader issue that's very much worth discussing. So the economy is growing at a very modest pace right now, just a little bit over 2%. The labor market has been very soft. We showed the ADP numbers recording outright declines in 3 of the last 4 months. Overall job growth has been soft this year. ADP showing a little bit over 60,000 jobs per month. The government's official numbers up through August showing an average of roughly 75,000 jobs per month, continuing the slowdown that's been in place for some time. So the headline macro indicators are suggesting a very lukewarm pace of expansion. And in the case of some of these employment numbers, again, we're seeing outright declines. This is very much not what we're seeing and have been seeing in the S&P 500 earnings reports that have come out over the last several weeks. Speaking to this chart, this credit card delinquency chart in particular, American Express reported earlier in this earnings season that their delinquency rate in the second quarter was 1.4%. So here we have the overall delinquency rate as reported by the Federal Reserve Bank of New York, the nationwide delinquency rate, long-term delinquency rate of 12.6%. American Express is reporting a rate of 1.4%. Now, some of that is definitional, the difference between the share of credit card balances versus the share of credit card accounts that are delinquent. But more to the point, this speaks to the difference between the market that American Express is serving and the broader economy. So the numbers we're seeing from AXP, from Visa, from other financial services companies in the S&P 500 very much reflect consumer finances at the upper end of the income spectrum. American Express in particular services a more affluent client base. We're not going to see a very high except a very high delinquency rate from American Express, except in extreme circumstances. But we're seeing a very bifurcated economy right now. You may have heard the term the K-shaped recovery or the K-shaped expansion. Upper income cohorts doing relatively well, wealthier cohorts doing relatively well because the equity market is doing well, so net worth is rising. Lower income cohorts not doing as well because the labor market is expanding very, very slowly. And so we're seeing that in the split between what some of the S&P 500 companies are reporting and what we're seeing in the nationwide numbers, such as for delinquency rates. We see this for overall corporate profits as well. S&P 500 corporate profits on track for another robust year-over-year growth rate. Corporate profits for the economy at large, we're not going to get Q3 numbers until November, but through Q2, overall corporate profits for the economy at large again, as reported by the Bureau of Economic Analysis, were barely growing in the very low single digits. And so far on a year-to-date basis are actually in negative territory. So the broad economy is not quite the same as the S&P 500. We see that in these delinquency numbers. We see it in the overall profit numbers. And it suggests that the risks are more pronounced right now. The risks are more elevated right now. The broad risks, the risks of recession, the risks of a bear market, the risks are more elevated than are reflected in some of these earnings reports that the market is very much reacting to at this point. So
To watch this month's complete analysis and receive daily updates directly to your inbox, become a member at cycleframework.com.